The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs, the products. You just need to make the call, 800-306-1990, 800-306-1990. The S&P 500 now up 49 points. We like seeing that. Where will it end? We don't know. But up 49 right now for the S&P 500. We're looking at the 10-year Treasury. Right now, that one is down 5 basis points, 3.521. Mortgage-backed securities, those are up 28 basis points, which means interest rates are down ever so slightly. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year conforming loans down nicely on Friday, 6.366. Jumbo's down nicely, 6.426. 30-year FHA down 6.331. USDA, for those in the rural areas, down 6.344. And the best loan on the market, and actually it was, almost. It was just that, and Jumbos were down about the same amount. Pretty nice. The VA loans, 30-year, 6.058. Again, that's all according to OBMMI, and the rates are even better today. Why? Because all that information, you can find that right there on the super secret website, google.com. Well, after a little later in the markets on Friday, the ISM, that's a service sector, the services index joined its manufacturing brethren in printing below 50. The index fell to 49.6 from 56.5 in November, not including COVID. This is the first time we've seen that below 50 figures since December 2009. New orders dropped sharply to 45.2. Employment fell into contraction, and supplier deliveries eased again. Prices paid fell over 2 points. Here's a point from the ISM that explains the current situations. Orders from customers are softening, and some orders are being canceled. We've lost employees due to normal attrition and are having issues backfilling positions. The supply chain is catching up to demand, and suppliers are trying to lower inventory for calendar year end and are still working through excess supply, unquote. Bottom line, the U.S. economy continues to weaken, and that's now spreading into services. More anecdotes and more understanding of the jobs report that came out in December. And a lot of people looked at that jobs report and said, wow, we're creating lots of jobs. Well, that was just a part of it. So Friday's jobs report showed a slowdown in wage growth and therefore wage-pressured inflation, which the markets celebrated. It did, however, show that there were 223,000 jobs created. But when sifting through the details of the report, the data is weaker than it first appears. We already talked about how all the job gains were part-time, of which 190,000 were because of weak economic conditions, and those that took on an extra job to make ends meet jumped 370,000. We also mentioned that the hours worked dropped to 34.3, which is the fourth straight month where we saw a decline. But if you were to attribute the drop in hours to actual jobs, now think about this. Basically what you do is you look at it and you say, okay, if everybody in America, on average, the jobs dropped a tenth of an hour. Well, when you look at how many people are out there working, that equates to 373,000 jobs lost just by a tenth of an hour going across everybody. So instead of seeing a 223,000 job gain, we would have seen 150,000 job loss. Overall, the report was weaker than at first glance, and the lower wage pressure is exactly what the Fed wants to see. Hence, we saw the rally on Friday and follow through today. So we're going to get some numbers the rest of this week. We've got Jerome Powell speaks tomorrow. The 10 and 30-year auctions are this week. The Consumer Price Index inflation report on Thursday. And we'll have all that information. We'll cover and carry all of that reporting for you. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make a call. 800-306-1990. 800-306-1990.